Okay, so this is a trading hour from today. Now this is a little tricky. It's on a 15-minute chart. It's gold, as you can see, and the reason it's a little tricky, I've just entered it, and I'm going to do a just 1 bar stop loss on that one, which is going to be this big bar here. And I'm not going to take a big risk on it. Okay, and that should cover that. And in fact, let's do 2 of them together at the same place. One of them is going to cover the other one. I'm obviously going to run to the upside into that 4,230, I think it was. Okay, and let's just do that. Yeah, 4,239 actually, but I'll keep it 4,230. Now, why? Look at the note here, right? This is also a setup hour, but this is a pushy move into 4. The safer way to trade this is at 10 past 5 or at 4 o'clock. So between 4 and 10 past 5, let's say, okay? Because here we've got a pushy move, okay? So there's no use in taking a big risk on this one, okay? So if I've got a stop loss, let's say, it should be about, what, 250? Yeah, 286, okay? And that should cover me, yeah, 291 to 286. So that should cover me, and you can see there's already a gap to the upside. So if it goes in our direction, it should kind of fill in this gap, okay, to here. So if I was to draw this here, we should be coming up into there, right? So if the market pushes to the upside, we should be okay. If it doesn't push it up, and we get something crazy and we get a down move, we don't want to be risking too much, okay? But I think that makes sense. So if you can, when you're entering in a situation like this, what you want to measure is obviously, right, with your time, your bias, okay, is our bias is to the upside on gold. And on the pullback, we want to come back. On the pullback, we want to go up. And this was the zone we talked about yesterday as well. And it was also according to our daily PST levels. So it was all honky-dory going to the upside. Obviously, a better option would have been, if the market was down here during the trade hours. It still might be if the market gets a little choppy and instead of going up, comes to the downside into the next trading hour. So what we want to be doing is making sure we're on top of our game. That's going to be 4 o'clock on the platform. It's 10 past 5 my time, and now I've got 6:50 my time. It's going to be 5:50 here. All right, and if we have direction, the market should then go into 9 to 9:30 or 10:15 in fact. All right, so keeping a tight stop loss on this one is not a bad idea. In fact, as the time is moving on, you see that hour here, right? You can see, you can't see. You can see this is 2:30 already, okay, on the platform. And that was 10 past 2. And this is 2:30 now. So this time should already be activated. So my stop loss shouldn't even be that far out. Because if it's going to go in our direction, it should. If it doesn't, don't stay in there and get out. All right, does that make sense? I hope it makes sense, okay? Because once this hour is over, we're either going to push into there or push to the downside. And if I have a bias to go up and I wanted to get in, then I don't want to be taking too much risk, okay? And that's why if I get stopped out, it's a tight stop loss. That is the low of this bar straight after that one. So that's how it's going to pan out. So obviously I'm going to keep an eye out for this until 4 o'clock to see what's going on. And if it keeps pushing in our direction, great. Because what we want to do is close that. It'll cover the trade. And then if the market pulls back later on, I want to go long again possibly. Okay, I hope this little video sheds a little bit of light as I do practical stuff with time and price.